Welcome to Orchestra Economics classes. Today in this video, we will discuss regarding the various methods of measurement of national income. We all know that there are mainly three methods of measurement of national income. They are: number one is the product method, number two is the income method, and number three is the expenditure method. Product method is also known as value added method. In product method, why actually there are three methods? Product method, we can calculate national income or measure national income either by taking product method or by income method or by expenditure method, because we all know that in an economy, total product is equal to total income is equal to total expenditure. What is actually produced in an economy, either goods or services, that is equal to total income, and what is income? That is also known as expenditure. Income for one is expenditure for others. So total product is equal to total income, and which is equal to total expenditure. So we can measure national income by taking either of the three methods, right? So we will start our discussion regarding product method. How using product method we can calculate national income. You see, I have told you that product method is always also known as value added method. In production method, you see, generally we take the market value of all the final goods and services produced in a country during an accounting year. We know that accounting year means it is always April 1st to 31st March. April 1st to 31st March. That is accounting year. So within this accounting year, during this accounting year, how much of final goods and services are produced and what is their market value? If we go on calculating the market value of all the final goods and services produced in an economy during an accounting year, then that will give rise to national income. So for calculating national income, we can use either product method, or we can take into account the value of final goods and services or value added at each step during production process of different goods by different production units. You see, when we calculate national income in product method by taking the market value of final goods and services, then it will give rise to gross domestic product at market price. It will give rise to GDP at market price, value of final goods and services. Value of final goods and services, give rise to, when we add them, it will give rise to GDPMP, gross domestic product at market price, right? But if we will calculate by taking the value added at each step during the production process at different goods by different production units, then we have to take the gross value added by all the producing enterprises in all the three sectors: primary sector, secondary sector and tertiary sector. In all these three sectors, what is the gross value added in the production units by the producing enterprises? When we calculate them, when we add them, the gross value added in the production units at a particular year by the producing sectors, primary sector, secondary sector or tertiary sector, then it will give rise to GDPMP, gross domestic product at market price. So we can take either of the two. Either we can take the value of final market value of final goods and services and calculate GDPMP, or we can take the gross value added by all producing enterprises in primary sector, secondary sector as well as in tertiary sector. Then also we can get GDPMP, right? So this is the process how we can calculate GDPMP. Then you see how to calculate national income in product method. First, calculate GDPMP. How? How to calculate? By adding the market value of all the final goods and services produced within the country during the year. How to calculate? How to calculate GDPMP? Suppose n products, n number of goods and services are produced in an economy within a particular year. Then how to calculate GDPMP? GDPMP is equal to, how to calculate at market price, that is P1Q1 plus P2Q2 plus P3Q3 plus up to plus PNQN. Just PNQN. What is the price of first commodity, commodity 1, and how much of that commodity is produced? What is the quantity of that commodity Q1? Multiply it by its price, then find out the market price of product 1. Similarly, product 2, P2Q2, product 3, P3Q3, product 4, P4Q4, and PNQN is nth product. So that is how much of a product is produced within a given year in an economy, and what is its price. Just multiply the quantity of a good with its price, then you can get the market value. So GDPMP can be calculated by adding the market value of all the final goods and services produced within the country during a particular year. Then after getting GDPMP, what you will do? After getting GDPMP, we all know that national income, what is national income? When we get NNPFC, NNPFC is national income, nothing else. National income means if you go to calculate national income, just find out the value of NNPFC, net national product at factor cost, then it will be your national income. So you see, by adding the market value of all the goods and services, we get GDPMP. Then after deducting depreciation value from GDPMP, what we will get? GDPMP minus depreciation value. What we will get? We will get net domestic product at market price, NDPMP. Market. When depreciation value is deducted or subtracted from gross value, we will get net value. So after deducting D from GDPMP, we get NDPMP. Then after getting a NDPMP, what we will do? Deduct NIT, net indirect tax. Net indirect tax, when you deduct net indirect tax from market price, then definitely you will get NDPFC, net domestic product at factor cost. You see, from GDPMP, by adding all the market value of all the final goods and services, we get GDPMP. After deducting depreciation value from GDPMP, we get NDPMP. After deducting NIT, net indirect tax, that is indirect tax minus subsidy, net indirect tax from NDPMP, we get NDPFC. Now, what we will have to do to get NNPFC? Just add NFIA to NFIA to NDPFC, so that we can get NNPFC, and this is the NNPFC is the national income of a country, right? So you see here, first get GDPMP, right? Then deduct depreciation from GDPMP, get NDPMP, then deduct NIT from NDPMP, get NDPFC, then add NFIA to NDPFC and get NNPFC, that is the national income, right? This is the way how we can calculate national income in product method, right? Then you see here in an equation it is given national income in product method, national income, that is NNPFC, we know NNPFC means it is national income, is equal to GDPMP minus depreciation. When we deduct GDPMP, depreciation from GDPMP, we get NDPMP, then minus NIT, we get NDPFC, right? NDPFC, then plus NFIA give rise to NNPFC, right? NNPFC, that is national income, right? So you see national income is equal to GDPMP minus depreciation minus NIT plus NFI. Anyhow, if GDPMP is given, we can at first we can get GDPFC by deducting NIT, or we can convert it into GNPMP by adding NFIA, or we can convert it into GDPFC by deducting NIT. Anyhow, we have to find out the value of NNPFC, right? So this is the equation, NNPFC is equal to GDPMP minus depreciation minus net indirect tax plus NFIA. And GDPMP, how we have to calculate GDPMP? That is, I have to already told you, Q1 plus P2 Q2 plus P3 Q3 plus P4 Q4 plus Pn Qn, when there are n units of goods and services are produced in an economy, nth goods and services, n amount of goods and nth goods and services are produced. So it is good 1, good 2, good 3, good 4 up to good n. So multiply them with their prices and get their market value of each commodity, then just add all the market values of all the commodities and you will get GDPMP. After that deduct D, you will get NDPMP, then deduct NIT, you will get NDPFC, then add NFI to NDPFC, you will get NNPFC, that is national income, right? This is the product method, how we can calculate national income in product method. Then we will go to income method. You see, income method. What is income method? I have already told you total product is equal to total income is equal to total expenditure in an economy. So by income method also we can calculate national income. You see, from income angle, national income can be defined as national income is the sum total of factor incomes earned by normal residents of a country as rewards for rendering their factor services during an accounting year. So it is the sum total of factor incomes. Just remember this. This is the sum total of factor incomes. National income is the sum total of factor incomes earned by normal residents of a country for rendering their factor services during an accounting year. So this is national income as per income method. According to this method, national income is measured in terms of factor payments to the owners of factors of production during an accounting year. Then for calculating national income in this method, first of all, factor incomes are to be classified, and factors incomes factor incomes can be classified under three heads as compensation of employees. Number one is compensation of employees. Number two is operating surplus. And number three is mixed income. So first of all, what is compensation of employees? What do you mean by compensation of employees? Compensation of employees actually include wages and salaries, wages and salaries, wages and salaries, right? Number two, in cash and in kind. Wages and salaries in cash and in kind. Cash and kind, right? Then employees' contribution to social security schemes. Social security schemes. Employees' contribution to social security schemes. Then pension on retirement. Retirement pension is also included on compensation of employees. Retirement pension. Okay. What is retirement? You just remember one thing. There is a difference between retirement pension and old age pension. Old age pension actually old age pensions are unilateral payments or transfer payments. They are not included in national income, but retirement pensions are included in national income. So, compensation of employees include number one, wages and salaries, then payment in kind, employees' contribution to social security, then pension on retirement. Number two, operating surplus. What is operating surplus? This includes wages and salaries, compensation of employees. But operating surplus means usually there are, we know that there are four important factors of production: land, labor, capital, organization. For labor, we are getting wages and salaries, that is included in compensation of employees. But the rest ones, they are land, capital and organization. For land you are getting rent, for capital we are getting interest, for organization or enterprise, entrepreneurship we are getting profit. So this operating surplus, remember it, operating surplus includes number one, rent, number two, interest, and number three, profit. So operating surplus means rent plus interest plus profit, right? Then what is mixed income? What is mixed income? Mixed income means incomes of the self-employed persons. Income of the self-employed persons. Self-employed persons. Self-employed persons' income by using their own factors of production, land, labor, capital, organization, what they are getting, that is known as mixed income. So these three are known as factor incomes. Number one is compensation of employees, number two is operating surplus, number three is mixed income. By taking the sum total of all these factor incomes generated within the domestic territory of the country, we get domestic income. It is NDPFC. Just we add all these things, this plus this plus this, right? So this will give you NDPFC, net domestic product at factor cost, right? You see, by adding just these three factor incomes, compensation of employees, operating surplus and mixed income, we get NDPFC, net domestic product at factor cost. So how to get national income or NNPFC? Just add NFIA. to NDPFC, you will get NNPFC, right? You see. So, after adding all these three things, we are getting NDPFC, NDPFC, right? And just by adding NFIA, net factor income from abroad, we will get NNPFC, right? So, this is the process how to calculate national income through income method, right? Next we will go through expenditure method. What is the expenditure method? And how to calculate national income or how to measure national income through expenditure method. You see, in terms of expenditure, we can define national income as national income is the sum total of expenditure on the purchase of final goods and services in an economy during an accounting year. National income is the sum total of expenditure. What are the expenditures? 4 types of expenditures classified. You see, number 1 is private final consumption expenditure, C. Number 2 is investment expenditure, I. Next, number 3 is government's final consumption expenditure, that is G. And number 4 is net export demand for goods and services, that is X minus M. So these are classified as different types of expenditures: private consumption expenditure, or we can say household consumption expenditure, then private investment expenditure, government's final consumption expenditure, and net export demand, that is export minus import. So total expenditure in a country include either consumption expenditure or investment expenditure. Now, sum total of these expenditures gives rise to GDPMP, gross domestic product at market price. You see, gross domestic product at market price. You see, this is expenditure method. Sum total of this 4 gives rise to GDPMP. You see, C plus I plus G plus X minus M. Household consumption expenditure, investment expenditure, government's expenditure on goods and services, and net export demand, that is export minus import, that is the 4 are included. When we add all these 4, C plus I plus G plus X minus M, it will give rise to GDPMP, gross domestic product at market price. Then after getting GDPMP, just deduct D, depreciation value, and get GDP. What you will get? GDPMP minus D is equal to NDPMP, net value. You will get net domestic product at market price. And after getting net domestic product at market price, deduct NIT, net indirect tax. You will get net domestic product at factor cost. After getting net domestic product at factor cost, just add NFIA to NDPFC, get NNPFC. So that is NNPFC means it is national income of the country. So symbolically you can tell GDPMP, by adding all the expenditures we get GDPMP, and deducting depreciation value from it we get NDPMP, and after deducting NIT from NDPMP we are getting NDPFC, and after adding NFIA to NDPFC we are getting NNPFC, and this NNPFC is the national income. This is the national income of the country. So you can measure national income through expenditure method in this way, right? Then you see, I have given a flow chart just to remember these things. Product method. You see, this is product method, how to calculate national income in product method, in income method how to calculate national income, through expenditure method how to calculate national income it is given. You see, in product method, first by adding the market value of final goods and services, we are getting gross domestic product at market price. And after deducting depreciation value, this is minus sign, you see, after getting depreciation value, after deducting depreciation value from GDP MP, we get NDP MP. And after deducting NIT from NDP MP, we are getting NDP FC. Then after adding NFIA to NDP FC, we are getting NNP FC. You remember in this way, this is the method of measurement of national income in production method, right? Just add the market value of all the final goods and services, get GDP MP, deduct depreciation value and get NDP MP, deduct NIT from NDP MP and get NDP FC, and add NFIA to NDP FC and get NNP FC. That is national income. Now, you see income method, how to calculate national income. In income method, just add all the factor incomes, then get NDPFC, right? All the factor incomes. Add all the factor incomes, compensation to employees plus operating surplus, compensation to employees plus operating surplus plus mixed income. Right? Add all this. Get that is equal to NDPFC. NDPFC. And add NFIA to NDPFC, get NNPFC, and this is the national income, right? Now, in expenditure method, you see how to get national income. First, add all the expenditures, that is C plus I plus G plus X minus M, and get GDP MP. Deduct depreciation value, get NDP MP. Deduct NIT from NDP MP and get NDPFC. Add NFIA to NDPFC and get NNPFC. That is national income. So, these are the three methods to easily understand. I have given this flow chart. So, just go through these flow charts. And this is all about the measurement of national income through product method or value added method, income method and expenditure method, right? I hope you have understood. Thank you all. Thank you for watching this video. Just I will request you to like, give your comment, share the video among your friend circles, and subscribe the channel if you have not yet. Thank you all. We will meet in our next video. Thank you all.